my custom trading view indicator that completely changed the game when it comes to trading. You know what always frustrated me the most about trading? Spending hours manually drawing support and resistance levels, wasting time analyzing the charts. That's exactly why I decided to create my dream tool. First of all, automatic detection of all of the support and resistance levels. No more wasting time drawing them manually. Also, ready to use buy and sell signals on the chart. This is not just indicator, it's like having the second brain on your chart, doing all the complex technical analysis for you. This tool saves your time, removes emotions, and makes trading as simple and as clear as possible. I'll show you exactly how my indicator works in real time and how it can help you to take your trading on the next level. So guys, here's our pocket option account, and I'm gonna switch into the windows from the pocket option to trading view. Here it is, where we can see my indicator and analyze the chart. So we're gonna analyze the chart here, then go to the pocket option and open a trade. Depends on what indicator says to us. So here we can see a pretty long upward trend for a long time, of course with some kind of the corrections. So let's change the time to 2 minutes and we open a buy trade here. Yes, here it is. Because many people will think that it's better to open a sell trade here because it was an upward trend for a long time and it looks like the start of the reversal. But actually, this red candles was just a corrective once, and now I will explain you why. So we will start with general background and chart context. First of all, we use here time frame of M1, 1 minute. So this means each candle on the chart represents 1 minute of price movement. So the trade was open for 2 minutes, corresponding for 2 candles. Also, here we can see a clear uptrend after the local low, and there is a sequence of higher lows and higher highs. So this indicates a dominant bullish sentiment, price growth. Also, we can see here strong bullish movement before entering the trade. So we see 3 strong green candles in a row with almost no lower wicks. It's a sign of strong buyer pressure. Also, we can see a breakout of the local high before entering the trade. So the price broke the previous local high, which is a signal for trend continuation. Also, here is no reversal signs. There are no bearish signals on the chart, such as pin bars with long upper wicks, doji candles, or bearish engulfing patterns. So this reduced the likelihood of reversal within the next 1 to 2 candles. Also, volume and impulse judging by the size of the candles and their sequence. A strong impulsive entered the market, which is typical for breakout and trend continuation moments. So here is 10 seconds till the end of our trade, guys, and we are definitely in the plus. So it's 4, 3, 2, 1. Boom, we close this trade in plus, guys. Okay, perfect. So now we change our amount of money per trade, and we're gonna come back to the trading view with my indicator to understand what trade we need to open next. So I waited here for some time to find a good entry point and to show you some interesting situation. By the way, we're trading on Euro/US dollar, not OTC, of course, because on TradingView there's no OTC pairs. So we can see that our chart achieved its new resistance level and started going in a downward direction. So we change our time to 3 minutes and we open here a sell trade. And now I will also explain you why. So here we also use M1 time frame. So this trade is set for 3 candles because it's 3 minute trade. So it's important to identify signs of local reversal or correction after an impulse. So prior to the intro, there was a stable uptrend, and after some time, so the price has been moving steadily upwards, forming a series of bullish candles. It's a classic impulse movement. However, it is noticeable that, first of all, the trend is losing strength and a phase of slowdown and consolidation is beginning. Here we also can see candlestick signals at the entry point. First of all, it's formation of a double top resistance level. So the price touched the level twice but failed to break through, and this is a sign of a strong resistance. So this double top often precedes a correction or reversal. Also, here we can see a bearish engulfing pattern. Right before entering the trade, we see a large red candle engulfing the previous green one. So this is a strong reversal pattern, especially after a bullish impulse. And also here we can see appearance of upper wicks on candles. So the candles before the entry have pronounced long upper wicks, indicating sellers' pressure and the inability of buyers to hold the price higher. So guys, again, first of all, strong bullish impulse before, price tired right now and started to correct. Also double top, it's a classic reversal figure. Also bearish engulfing plus upper wicks, and it's indication of a reversal down, and 3 minutes and try optimal time to catch the pullback from the resistance area. And guys, it's 3, 2, 1, and we close this trade in a plus as well. So we change our amount of money per trade, and let's just wait a little bit to find a new entry point where we can open a trade. So here we change the time to 4 minutes and open a sell trade for $309. Here actually everything is pretty obvious. It's pretty consistent and strong downward trend going, and we can see it also by the indicator how it's crossing the lower line of the Bollinger Band, indicating us about the breakout. Also here we can see the signal long from the indicator, but actually as you can see, just because of this green candle, so that's how the indicator is getting every noise of the chart. And actually it's good for us because we trade mostly on the short-term trades with 2 or 3 minutes time of the expiration. So for this it's pretty good, but at the same time you need to take a look at the other things on the chart. So firstly, it was a strong bullish impulse. The price was rising sharply, so we can see a series of strong green candles, and this indicates powerful buying pressure. Also, we can see here formation of the top, so the price reached the maximum and rejects down from this level 3 times. So this forms a triple top pattern, which is a strong signal of a potential reversal. Before it was double top, so now it's already a triple top. Also here we can see candles with long upper wicks. It's a sign that sellers are starting to push the price down, and after the top formation and bearish engulfing pattern appears, so a large red candle that fully covers the previous green candle, and this is a classic signal for a price decline. And we were already talking about this, but it's almost the same situation, so that's why it's almost the same signals for opening a sell trade. And also after the engulfing pattern, several consecutive red candles appear, each forming a new local low, confirming that sellers have taken control. And also here we can see breaking the local support, further strengthens the bearish scenario. Also after a confirmed reversal in the start of the bearish impulse, it is logical to expect the price to continue moving down over the next 3 to 5 minutes. So therefore entering the trade for 4 minutes provides enough time for the impulse to develop, not too short to avoid being caught in a pullback, but not too long to avoid the start of the new upward correction. So again, first of all, a strong resistance level. It was a triple touch level without a breakout. Second of all, reversal candlestick signals, appearance of upper wicks, then a bearish engulfing pattern. And also confirmation of seller strength, series of strong red candles, and a break of local support, and market context as well. After a strong uptrend, the market became overheated and a correction began. So now guys, it's 35 seconds to the end of a trade. We can see some green candle there as a correction of the price, but I'm sure that we're gonna close this trade in a plus because it's just a correction of the price. And I'm more than sure that this chart will continue going lower and lower and lower, probably till the previous support level after this kind of the long upward trend. So it's 10 seconds guys. 9, 8, 7, 6, 5, 4, 3, 2, 1. And we close this trade in a plus. So now we change our amount of money per trade. We already made $500. That's really good result actually. So now let's wait a little bit to understand what kind of trade we can open. I'm pretty sure that the chart will continue going in the downward direction again and again. But I want to wait actually for a more interesting situation than just a consistent downward trend, you know? And guys, for those who's watching my video right now and thinking this is all really interesting but so difficult, I would never do it by myself. Lisa, maybe you have some solution for us, beginners. And my answer to you, of course, yes. I have my own Telegram channel with absolutely free signals on the pocket option. I know maybe it sounds pretty basic, but guys, believe me, it's not a clickbait. It's actually and literally free. I don't take any money from my subscribers for my signals or the VIP Club channel, and also the access to my VIP is forever, at least for now. So guys, don't miss this opportunity. You know where the link to my Telegram channel, of course, in the description of this video, and let's continue trading. So guys, here we waited for a little bit of time and we still open here sell trade for 4 minutes also, even though for someone it would be like, Lisa, why you did it? We can see a green candle there, so it indicates about the reversal. But guys, now I will explain you why it's wrong. So again, after the formation of the maximum of the previous resistance level, a series of strong red candles appeared without significant pullbacks upward. Also here we can see the absence of long lower wicks on the candles confirms the strength of sellers. So it's meaning the price is not being actively bought back. Also, the price broke local lows and this level became resistant. The chart shows a step down structure where each new candle forms a lower high and lower low, and also here we can see the absence of consolidation zones and strong bullish correction. So the movement down is impulsive and confident. Also, why I used here the expiration of 4 minutes. So considering the strength of the bearish impulse and the price movement dynamics, 4 minutes here is the optimal duration for the trade, allowing you to avoid possible short-term corrections and capture the main downward impulse. And in such situation, it is better not to enter for 1 or 2 minutes due to the risk of a sharp pullback. So a 4-minute expiration allows you to more confidently capture the impulse movement. So guys, it's 2 minutes and 5 seconds. So that our trade, as you can see, is going pretty well. So again, first of all, here is the reaching an important resistance levels from where a strong downward movement began. Also, candlestick patterns, long upper wicks, a series of strong red candles without the pullbacks. Also, break of local lows, strong bearish impulse, no buy reactions or upward pullbacks, just a little bit. And here we have optimal expiration time, 4 minutes to capture that impulse downward in a strong trend. Here we can see some green candle appeared on the chart right now, but we have enough time to close this trade. So it's 20 seconds to the end of a trade, guys. Okay, we can see some reversal already because we can see that our chart already achieved the previous support level and it started reversing from that local low. So it's 30 seconds to 1. And we were on time and we confidently closed this trade in a plus. So now we change our amount of money per trade and we gonna wait here a little bit because it's definitely already looks like the start of the uptrend. So here, guys, we wait a little bit for a good entry point and we confidently open a buy trade for 4 minutes. So here we can see it's already 3 strong green candles indicates us about the reversal, but it's not just like that. And now I will explain you more. So we start with general chart context. First of all, here we can see a strong downward trend before. So before the trade was opened, the price was in a steady and sharp downward movement. A series of red candles without the pullbacks or consolidation indicates strong selling pressure. We were talking about this already. Also, key support level reached. So the price stopped around the previous support level where, as seen on the left side of the chart, there was previously strong buyer activity. This is a potential support zone. Now we go to the candlestick analysis at the entry point. So first of all, formation of the bottom. So the last red candle before the entry had a long lower wick. And this is a clear signal that sellers tried to push the price lower but failed. So the buyers stepped in. Second of all, reversal confirmation with a green candle. Immediately after the red candle with a long wick, a green candle was formed, covering the body of the previous one. So this is an engulfing pattern that we were talking about, or at least a signal of the beginning of correction or upward pullback. So guys, it is 20 seconds till the end of our trade. So let's see how we will close it. We can see some red candle there as a correction of the price, but I'm sure we're gonna close it. So it's 7 seconds, 6, 5, 4, 3, 2, 1, and we close this trade in a plus. Okay, perfect. So now we will change our amount of money per trade, and we can see the payout rise a little bit to 86%. So now it's pretty interesting situation. Or the chart will go higher and it was just a corrective candle as we thought, or if it will cross this red line and will go lower and lower, it could mean that our price creates a new resistance level. So now it looks like the start of the reversal, but better let's wait a little bit to confirm it. Okay, we can see that it didn't touch this red line, so we open here buy trade for 4 minutes. So we can see that our uptrend is still continuing and this red candle was just a corrective one. So first of all, here it is clearly visible on the chart that before entering the trade, the price had been actively declining for a long time, right? A sharp movement down without significant pullbacks, which is a classic strong bearish impulse. We were talking about this. However, it is important to understand that such movements cannot last forever without corrections. The market briefs, and after an impulse, a pullback or reversal often falls. The price reached the support zone. This is a zone where previously visible on the left side of the chart, there was strong buying activity and from which the price had already bounced upwards. So this increased the likelihood that buyers will appear here again. So what is the key signals here for entering a buy trade? First of all, long lower wicks on red candles indicates that sellers tried to push the price lower, but buyers stepped in, buying activity increased. Also, appearance of a bullish candle after a series of bearish ones, so it's a signal of short-term impulse reversal to the upside and the beginning of a corrective movement, and also formation of a mini support level. So the price began to bounce from the same zone and a slowdown of the decline and the start of reversal is visible. Also, a small consolidation began, followed by breakout upward of the local mini level. Here is some red corrective candle on the chart. So it's good that we open here trade for 4 minutes to miss all of these fluctuations and corrective candles, because it's actually a pretty common mistake of a lot of the beginners thinking that if they will open a trade for 1 minute, that's how they will get more profit and they will trade more fastly and everything. But guys, believe me, it's better to move slowly sometimes, and 3-4 minutes, 2 minutes is not that long time. So it's better in some kind of the situation, add more minutes of your expiration time to miss all of this corrective candle and close your trade eventually in a plus. So here, as you can see, it reversed in an upward direction again, so it's good for us. It will cross the green line right now. So let's see, it's 40 seconds. So actually here we have a pretty good chart, and even without any that much analyzing, we could just open a trade up because we can see a strong downward trend, then a strong upward trend after. So here we can just follow a trend and open a trade after the trade. So it's 19 seconds to the end. Let's see. Okay, it's reversing pretty fast right now in a downward direction. Okay, let's wait. Ooh. Oh, what a correction. Oh my god, it's so close to our entry point. 2, 1. Boom. We close the trade in plus, guys. Okay, we were pretty lucky to close it. Now let's change our amount of money per trade. Let's do a double, like $1,570, and time of the expiration to 3 minutes, and we immediately open a sell trade here. But you will ask me why, Lisa? Maybe it was just a corrective candles, but no, guys. And I will explain you why. So let me break down in detail why in this situation a sell trade was open for 3 minutes. So before the entry point, a strong downward trend was observed. Again, of course, we're talking about this again because it's the same situation. So this is clearly seen by the long series of red candles without significant pullbacks. So sellers dominated the market. Then the price reached the support area from which a natural upward pullback occurred. So this is normal after a strong fall. Then after the pullback, the price approached the area of 1.08. So this is a local resistance level, and this is exactly the zone where, based on the price history, the price previously slowed down and there was a fight between buyers and sellers. So this level was formed by previous consolidation zones and horizontal price stops. What about also candlestick pattern? First of all, long upper wicks on candles. So a clear signal that buyers are trying to break the level upwards but fail. Sellers actively defend the resistance level. Also, small candle bodies near the level indicates weakness of buyers and a possible reversal. And a red confirmation candle. After a series of candles with upper wicks, a red candle appears and is a signal of the beginning of a downward impulse. So the price approached a local resistance level after an upward pullback. Candlestick analysis showed buyer weakness, long upper wicks plus small candle bodies. And also, the appearance of a red confirmation candle is a sign that sellers are ready to push the price down again. And the choice of a 3-minute expiration time here is ideal for such situation when we expect a local pullback or a continuation of the global downtrend. So guys, it's 20 minutes till the end of our trade, and as you can see, it's going pretty well. And I'm sure we're gonna close it and it's not gonna be any corrective candles here. So it's 9 seconds, 8, guys, together, 7, 6, 5, 4, 3, 2, boom. We closed this trade in the plus, guys, and we made $4,569 in just a few minutes, starting with $100. Thanks to my indicator. So guys, the link to my indicator will be in the description of this video, guys, so check it out, and I'm sure it will help you more in your trading sessions. And also let me know if you maybe already used my indicator, how do you like it, what is your experience, so it will be really interesting for me to know. And don't forget to subscribe to my YouTube channel because here I post a lot of the new information about trading every week. Thanks for watching, and I see you on the next trading session. Bye bye.